Okay, good morning, folks. We're looking at today's economic calendar. As you can see, it's pretty light until we get around 10 o'clock in the morning, and then we'll have some jawboning by Draghi. So if there's going to be any trading at all, it's going to be done preferably before that. Okay, so we have the dollar index. On the left-hand side, we have the weekly chart. And you can see pretty much what we're most likely looking to run out. We have our old high at the 100.52 level. So we'll be looking for a move into that level. Now these are not day objectives, these are objectives for the week. And even if price just simply goes above that 150 level and then trades lower and rejects, in other words, if it creates a high here, it gives us a tradable range for the rest of this week. But I want you to look at what we've done here for the better part of the last 2 years. So 2014, we've had this base, rallies up, create another base in here for consolidation. We're probably going to see it resume now. Huge amount of liquidity resting above that big 100.50 level. If that's the case, as we see here on the weekly chart, there's going to be potential weakness seen on foreign currencies until that condition is met. I don't suspect that we're making a high in here. I think we're primarily just consolidating to make another run higher. So underlying, as I look at my analysis going forward, everything that I trade is going to have this in mind. In other words, I'm always going to have this in the forefront of my mind, thinking ultimately the dollar's going to want to trade higher above that 100 level, at least to 100 mid-figure. We may see 101, 102. That's what I'm personally looking for. These levels are all finally coming into potential fruition. I think it could happen by the end of the year, obviously, because there's not that much in terms of distance. So we go into a daily chart. Let's zoom in a little bit. All right, so we cleared this high in here. You do not want to see price trade back below $98.80. Okay, so $98.80 is the pivot point, if you will. If we trade back down below that, we'll have to put our bullishness on the sidelines for the near term until we get right back above it again. But for now, as long as price stays above $98.80, we have to be a dollar bull. This morning, so far, we have seen a consolidation below this short-term high here. So we have a small little liquidity pool in the form of buy stops here. Prices being held in a consolidation. We have since come back down into this down candle here after this run up. So we're going to be looking for sensitivity going forward from here. Okay, you can see how price came down, hit that opening, 99.49. Low is 99.49. Now we do have sell side liquidity just below these lows in here. I don't like the idea going below that, because if we do, it's going to want to have to resist the temptation to go back down and close in this range here. All this. So while that could still potentially unfold for today, for the setup going into the remainder of London, going into New York was open. We're looking for basically the bias, if you will. And my idea is for this London session, we don't want to see it go down here. We want to see it maintain this range here and expand up from where it's at now. Given that, we've seen price come up, close in its range here. Up candle during a smaller consolidation. We traded lower, came back and hit that. Let's put that level in there, you can see it. So it's just basically a mirror image of what we saw on the dollar index. And again, just in reverse, as we showed on the dollar index, we had sell side liquidity on the dollar. Below here, we have buy side liquidity just above this high here. Again, I'd rather it not trade above that short-term high, because it would have to come back up potentially. It could trade up into this range here, but it would be more inclined to trade up to here if we see this run up. Now, two scenarios. We can hold the consolidation here and make a run for the liquidity below this low here. So we have sell stops below this low here, and we'd have to see acceleration. The question is on the weekly chart over here, we have 106.85 as downside, so we have about 100 pips there. So think about the symmetry there. We have 100 pips or so for upside on the dollar index relative to what we showed on the weekly chart. So 100.50 level. Now we have about 100 pips down to the next area of bullish order block here. So it's 106.85 relative to current price action is 107.88. So about 100 pips. We could see a run up above this short-term high in here. It could spike up above it, and then that would be a sell here. Looking for liquidity, run below here. It would be a low resistance liquidity run to be a seller. I don't want to see it go much above this high, because if it does, this is a very small little block here. Very small, and I don't think that's going to support it. I think it would probably want to run up higher and trade up into this, which takes us a little bit farther than I'd like to see it go, and it might run up there during Draghi's speech. So that may be that may end up happening later on this morning. And then, in other words, worst case scenario, we don't do anything through London. Say it's remotely, well, not remotely, but it's not realistic to expect it to trade up to here yet. Say it stays in a consolidation, but yet doesn't break down below 107.70. The expectation would be when Draghi speaks, it'll probably take it up there, and then it'll sell off then, and then we'll have a pretty good sell off then. Now, keeping an eye on the cable. Last week, this bugger did exactly what we were suggesting it would do. It would buck the trend, trade up, and close in its range. On the weekly chart, we traded above the last down candle here. So we're going to be looking for the 124.48 to 124.50 level. That may become sensitive going forward. In other words, it could potentially provide some support. If it doesn't offer support, then we have the down candle here, which is overlapping. And that comes in the form of its opening price is 124.83. So we're looking for 24.80 to 24.85. So we don't want to see price go below that. If it does, then it's going to resume its downtrend as well. I like this level. Should we trade down into it? So if we get some kind of weakness going into today, watch this level because it may end up holding price at bay. And then we come down to hit 124.80. We could see it run through and potentially come up here and close some of this bearish order block, fair value gap in here. So what next upside objective would be 28.80, 121.80. I'm sorry, 128.80. Let's say it correctly, Michael, please. All right, and we have sell side liquidity below the low here at 125.08. So we're looking for 124.80 as a potential downside. And we're seeing $1 CAD continuation on the upside as we were expecting on this pair. Real quick on the weekly. $138.10. This could see some really nice range expansion in here. Should we get some continuation on the upside with the dollar? Be mindful though that we're looking at a small consolidation in here. When we see that, it always has a pretty good likelihood of trading up and then turtle souping, running the sell stops below the marketplace, and then resuming. So we could see a little bit of a drop off. Preferably, we don't want to see that though. For this 38.10, we want to see it obviously once it's cleared last week's high rather, in the form of 135.48, which felt just 2 pips short of my objective, as we showed in the video. 135.50 was called. We saw that obviously since the weakest traded. So we're going to be looking for the market to expand, go lower. So we have an up candle here, the last up candle in here. You zoom in. Now we're very close to today's opening. So I'm about 14 pips away from today's opening. We saw the price already move above it. And we have a small short-term intraday low of 107.75. If we go to this level down here, we're going to expand through and trade below this low. what I'm watching is I want to see price retrade back up into, in other words, watch the bottom of this black candle or down candle. If it trades back up to this level here, this candle's low, as it happens live, if it hits it live as we're watching it, I'll put my short on at that moment, like right now. Okay, I'm short now, one contract or one lot, with the expectation of looking for a run below this low. I want 10 pips minimum below this low as a stop sweep. If we see expansion, it could be as much as 20 pips. I'll take half off. This little thing's always in my way. Just in case we get expansion, I'll just put a objective to take 40 off. Now what I'm trading on is why I waited for it to trade back up into the bottom of this candle. We've already traded down below this last up candle. And we have a liquidity below the low here and below the low over here. At the same time, we're looking for the liquidity on the weekly chart for the euro down at 106.85. And again, the idea is everyone's going to be seeing Draghi's speech later on this morning. And usually the idea is they want to see markets move or take their opportunity before that speech is done and then use the manipulation during that speech. So the truest form of price action is going to be prior to the speech. We have several hours before that happens, before the New York session opens up as well. Okay, for this to be a good solid sell, we don't see a range expansion on the dollar CAD, range expansion on the upside for US dollar, and that would support accelerated selling on our euro dollar short. what I'm watching is I want to see if we're able to stay below the opening price on the midnight candle. Now the opening at midnight New York time, seen on the 500 candle here, excuse me, because we're so close to the low where the sell stops will be resting for those that are trying to catch a long or try to capture a low. This little movement above the opening price normally wouldn't be as ideal, but because we're so close to this sell side, I'm thinking it was only poking its head above that opening price just a little bit, and then it would make the run. So on the range, on the daily candle, give me an idea what I'm thinking. If it hits the stop, I'll have a scenario for that as well. No fear. Okay, so say this is the, let me get this out of the way so it's not used yet. Say here's the opening price on the daily range in terms of power 3. We're looking at the opening with sell side liquidity just below it over here. The range would have created this small little movement up just a little bit above the opening price, and then expansion on the downside. The fact that we're going to be running out potentially the low here, that's the idea or the framework behind the trade. If that's the case, and we're that close to it, the likelihood of seeing a lot of upside above the opening price, not likely. If it goes much above the opening price, it's going to be viewed as the movement from the opening and down. Okay, that's why if we get stopped here, we have to wait and see. Obviously, if it goes there, we may end up changing directions on the day. We may not see this run above the 99.69 level because of Draghi. So the reason why we're allowing only a small movement above the opening price initially, right here, is because we're so close to that low. We don't want to see much movement above the opening price. So our stop can be relatively close. So we're more interested in seeing the price go down below this old low here than we are seeing willingness to go above the opening price initially. take a look at Euro Pound. Okay, we're going to collapse the trade here, protect the stop. We do not want to see it go back above the opening price. This is what we're seeing right here. So now we wait. I'm watching this order block here. If we lose it entirely, we will be switching gears, and we'll watch and see if this high is violated here. We'll be using that opening price as a bullish order block. We'll be switching gears on the session for London. And the reason why is if we lose this block altogether, that means that we've cleared out the bodies of the candles here, and we're probably going to want to trade softer. This liquidity run will be left for Draghi's post-Draghi speech. So it's a little tricky this morning. It would have been nice if it, once it got back above the opening price, if it would have spiked through here. Obviously, after we took our short off protecting the stop, I would like to see it run up there and clear that high out while still supporting this bullish order block. Because then that would be a run on the stops here. And then as long as we're inside this down candle, anywhere in this down candle, you could be going short still, and it's still a viable trade. It's not wanting to move much at all. The reason why I wanted to collapse the trade and protect the stop is because we went back to the opening price after it's already shown a willingness to go above it here. Much above the opening price is not necessary when you have that close of a liquidity run. And we were expecting range expansion should we get below that. The entry was based on this up candle in here being violated on the downside. So as soon as it came back and touched the bottom of that candle's exactly, yeah. I mean, I'm going to be distracted if I put all these questions and start answering it. The expectation is we wanted to see price once it traded below. Let's go down to a 15-minute time frame again. The last up candle, once it broke down through that, the expectation was we would see range expansion after that. In other words, we're treating it like an order block that's being qualified, and immediately right back to it. That was our like a last chance to get in before range expansion. It did not do that. It went right back to the opening price. So now this horizontal line here, this 500 or 5 o'clock candle, that opening price is the New York Open, or 107.94. We've already went above it here. So once it's moved down away from that, all we do is wait for an opportunity to get short. So yeah, you don't have much in terms of a range to trade back into. So once that up candle here was violated on this candle before the wick formed in a higher close, we want to be short rate when it touched there. The fact that it moved up back to the opening price, the probabilities fall off. We don't see the expansion down here off of that last up candle. In fact, that last up candle has now been engulfed, and now we're back above the opening price. So we're collapsing the trade, or collapsed the trade, because the probabilities of seeing the downside expansion has been removed by going back above the opening price. We've lost the order block, so now we're going to be watching the opening price here. If we can come back down into that, we'll be changing gears and we'll be going long. We have a gap up here that may be looking to be filled in. Okay, bullish order block has been removed. Now we have the opening price here, the down candle right here. Watch the high on that 107.96. So we can trade to 107.96. If we trade back down to 107.96, right in here. Right there. All it's got to do is just retouch that. And that's a long for a run to 108.40s. That's why Mondays are a little tricky. I'm watching this candle as it touches that level right there. As soon as it hits it, I'll go long. The stop will be placed below the short-term low, and we'll look for 108.40 going into New York. And I'll leave that go. Should we get the touch on that price right there. Okay. Stop is placed just below the low here. Limit orders here. Closing in this range. So now it's on autopilot. I don't think about it now because I already had one trade in. This is the second trade. We have a limited range because of Draghi speaking today. So now the only thing we do is let it pan out. As the price expands up, as soon as we clear, or if we clear, let's say it that way, if we clear the up candle here on the upside, the stop will go just 5 pips below the opening price. And I'll leave it like that until we go to the remainder of the range. So we're going to be looking for upside objective here and not expecting much above that. So that's it. We're going to let it go, and I'll give you this recording once I wake up, and then we'll resume with a recap through Twitter.